Hi everyone, welcome to this morning's webinar. Thank you for your patience in waiting, and we would like to get on and start. But before we do, as always, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. While I was waiting for David, I had a quick look through to who's with us this morning, and I can see we have a great collection of traders, and I can see we've got some new people as well, but I can see we've got some of our forex program students, we've got some users of our quantum indicators, and a couple of readers of my books as well, and some new people, so it's great. So whichever category you fall into, it's lovely to have you with us this morning. There's no fundamental news this morning of any significance, because there has been some important news overnight, and we're just going to see how that has had an impact, particularly on the Aussie dollar. But just very quickly, for those of you who maybe this is your first time, what we do is we look at the forex market through the prism of volume price analysis. It's the methodology that David and I have been using for almost 20 years now. It's not a new methodology, but it basically looks at a chart, the price action on the chart, and how and its relationship to the volume. By the volume, we look at this activity, the participation, what is going on, who is buying, who is selling, and what we're really looking for is we're looking for an agreement between the price action and the activity. And when there isn't an agreement, we call that an anomaly. That is highly suspicious and likely to cause either to cause a reversal on the chart. And reversals is something we're going to actually talk about quite a lot today. We're going to be focusing on how to identify them, how to validate them, using the chart, using VPA, and for those of you who have the indicators as well, we'll come up with some ways of pulling them together to help with that validation, if you like. As an indicator, that's what it does. It helps you with your analysis. It speeds things up, makes life a lot less stressful for you. But with the forex market, as with all markets, but particularly the forex, we really have to look at what the fundamental news is doing, how that is driving the price action, and is that going to be a driver for a potential reversal? And also, there's another strand we look at, and that is the related markets. What's happening in terms of what's happening in indices, because that tells us what is sentiment, what is the market sentiment, and again, that could be another potential driver for the reversal. What happens in trading, and I wouldn't say particularly in forex, but it's more noticeable in forex, is you can have a chart set up and you can apply your analysis, whether it's just price action based, you can put your indicators on and you think, oh, that's a great trading setup. Suddenly something happens and an unexpected reversal happens, and that can happen, as I said, for maybe you've forgotten that there's a piece of fundamental news coming up for one of the currencies in the pair that you're trading, and I can tell you that happens a lot more than you think. Or there's a dramatic shift of sentiment in the market, perhaps in another market, in the bond market, in the equity market, and that may have an impact on either the currency or the currency pair that you are trading. So reversals, you have all these factors that you have to be aware of. And then there's our old favorite, what we call the trap reversal, which is we're waiting 5 minutes now as we wait for the London Open. 24-hour markets are great, because what it means, you can participate at any time, wherever you are. You can pull up a chart and potentially see a trading opportunity. But when you have these when you have what we call the crossover sessions, in other words, we have another one financial center is closing. We're coming to the end of Asia Pacific, and we've had Europe open. Now we've got London. London is a huge takes a huge percentage of this market. It's nearly 40% of a 6 trillion a day market. So you can imagine there's a surge of participation, a surge of volume, a perfect time for a few what we call trap reversals. Also happens at the New York session, and that's quite interesting because there was a Aussie dollar trade that I looked at yesterday morning. It was a really nice trade in Aussie dollar. It looked like there was a reversal setting up on the chart, a chart reversal. but the reversal only happened in one of the currency pairs, because we also have something in forex. We have what we call a rotation. In other words, you can have strong flows into a currency pair. There's a buying of one and the selling of another, and then when it comes up to a new session, say the New York session, where the local currency, obviously for New York, it's going to be the Canadian, let's call it in the North American session, not just the New York session, where you've got traders to do with the dollar and the Canadian dollar, where you have a technical setup which was set up on the Aussie dollar moving into New York. It did reverse. And I'll show you as I said, we'll have a look at some of the screenshots that I took yesterday. But in fact, it was more in one of the currencies because, as I said, the local currency took precedence. So there's lots of factors to consider with reversals. It's not just buy low, sell high. There's a lot of nuance to it, and there are factors you have to be aware of. But it seems like a lot to take in. There is, but like everything else, how do you eat an elephant? One small bit at a time. That's also part of the reasons why we develop some of these very, very particular indicators, which those of you who are on the program, those of you who bought them, will recognize instantly, because what they do is they help us track the flows, first of all, into the individual currencies, and secondly, into individual currency pairs. And obviously, as we can see here, this is the currency strength indicator. That's the individual performance of a currency. Is it overbought? Is it oversold? And we look at what the pairs are doing. What is the strongest? What is the weakness? Again, potential points of reversal. We have the array, which is based on on momentum. In terms of which is the most downtrending, which is all of them. We want to look for potential setups in this reversal. And then we have a currency heat map, which we don't feature very much in these webinars, and perhaps we should, because this actually looks at the performance of the pairs across multiple time frames. So it saves us having to look at, as I said, how many charts, David, on there? 28 by however many? How many? 200. Even more than that. It's about 256 charts. So it's just a bird's eye view of all the charts and in all the multiple time frames. Right, I'm actually going to get some charts up. I'm going to pass over to David. He's got a few bits and pieces to say about reversals. As I said, those are the factors to determine whether we are looking at a potential reversal. There's all sorts of other things you have to bear in mind. There's where you place your stop loss, what is going to be your size position, etc., etc., etc. But let's just start by looking at some charts, what we can identify, how we can validate, I said, using VPA. And the elements of VPA that we use are the candles, candle patterns, and support and resistance as well. So just pass over to David. Is that okay? Do you want the charts as well, David? Do you want the screen?
No, just... Hi everyone, back again. Hopefully you can hear me loud and clear. I've had a few issues with my jack sockets this morning, so hopefully I'm coming over loud and clear. I have got the microphone switched on, so can you hear me okay, darling? Brilliant. Just to, before I forget, if you have any questions, please just drop them in the chat box. Short ones we'll answer there, longer ones we'll answer on air for you. So please just drop the questions there. In terms of reversal trading per se as a tactical approach to the market, it doesn't suit everybody. It's one that I favor personally, but it may not suit you. There are issues that you have to be aware of. Not least of all is that the advantages of trading reversals is that you're getting in early. You're taking advantage of the complete trend before it actually gets underway. The disadvantage of it is that you have to, two disadvantages. First of all, you have to be patient, because reversals don't just happen on the toss of a coin. Sometimes they take a while to develop. And the second issue is obviously to do with risk and reward. Leading on from that, the patience issue means that you have to set your stop loss that much wider to allow for that time, the buffering of time, the buffering of price action before a reversal actually gets underway. But the quid pro quo is that if you are prepared to put that extra risk on the table, you get rewarded with extra profit because you're getting into the trend early. So it's not for everybody. A lot of traders enjoy reversal trading. Some don't bother at all. They prefer to jump on an existing trend once it's underway, because if the trend is moving, then all you have to do is set your stop loss that much tighter. But of course, you've given up a chunk of the trend because that's already been and gone. You didn't get in early. You're joining a little bit later because you don't want to lay so much risk on the table. And really, that's what it comes down to. So I just want to caveat what we're going to do today and probably over the next sort of couple of weeks or so is really just say, look, this is a tactical approach to trading. It's not the only approach. It may suit you, it may not. It's understanding your temperament and how you want to approach these markets and what tactical approaches you may wish to take. Now, you may find that you take an armory to a complete array of tactics to market. You might find this is one, you might trade breakouts, you might trade trend, all sorts. Other traders may decide that that's all they're doing. They're just going to take this single tactical approach and apply it to all markets. Others have yet another approach where they take perhaps one target, one tactic, and only apply it to a group of currency pairs. There are so many myriad ways of approaching the market. You have to find out what works for you. I'm going to pass back to Anna. She's got the charts up and running now, so let's go back to her.
Just quickly, just to run through, as you can see here, there's really there's nothing actually, to be honest, until this afternoon. So it's one of those it's one of those times in trading where it is almost all down to the chart, unless something unexpected happens. But the tone for this morning has been set by these two releases here. This is from China, and as I always write, and I always stress, and those of you who are on our programs will also know and understand, anything China related is going to have a major impact on the Aussie. And I don't know whether we have any traders who perhaps trade the Asia session. I know sometimes we're joined by our Australian fellow traders from Australia, and they've actually been through that session. And if you look at some of the Aussie pairs, you'll see there's been some really nice moves where the Aussie was actually sold off quite strongly, because these numbers are not terribly encouraging. In other words, I'll just quickly bring out a Reuters, save me explaining it. Again, this is all this is covered in our program. Our forex program is really comprehensive. It's not just chart analysis and how you analyze a chart on VPA. We have we've integrated a lot of Wyckoff's work as well. You do get a complete education, in the sense that cover the fundamentals, what are the related markets, the psychology, the mechanics. It's a very, very comprehensive program. So you will understand, the students will understand the importance and significance of these two items of news. And the headline at Reuters says that China's factory deflation, in other words, prices are going down, deepens as the pandemic hits demand. If you think about it, if you're trying to sell something and you're having to reduce your prices all the time, it tells you that no one's really interested in your products, which is not really good news for the global economy, given the hit that it has taken from the pandemic. And all we do is we go over to the futures, and we'll see the S&P is down slightly, the Nasdaq is down slightly as well in reaction to that. And with no news this morning in Europe, it's going to be one of those days where, unless there's a big catalyst in terms of news, there'll be participation. Really just have to pay attention to the chart and see what is, what trading opportunity may or may not occur. Right, one of the pairs that I like to, one of my trading pairs, and one that I write about quite a lot, is actually the Euro Aussie. But before we start, let me just go over to the indicators, the CSI indicators, and see what they are telling us at present. And as I said, as we're looking for extremes at the moment, well, this suite of indicators immediately, you know, it saves you having to go through lots and lots of charts. While I've been talking, actually, what's happened to the Aussie yen? It's actually that's moved higher. So that's at the what we're looking for, as I said, at the extremes. It's, if you like, it just gives us a quick view of you know, which individual currencies and which individual pairs we perhaps could go and take a look at. I've got the hourly chart here. I'll just move that up. The hour is my context chart. I tend to stay on trade on time frames below 1 hour. So I need like what I call a benchmark chart. So what I can see here is I've actually see the Aussie is now has actually been bought. We've had that reaction to the Chinese news. I know the indices are sort of off a little bit, but they're coming back a little bit, David, aren't they? Yeah. Yeah, they are a little bit. So sentiment is yeah, it's, you know, it's overall, it's been positive. We have had a V-shaped rally in the indices, but you know, rallies, they're always going to be pullbacks, corrections, as you have you know, different waves of sentiment, different bits of fundamental news that hit the market. There are many people who say the rallies are just fake, they're not genuine, they are, you know, it's just ridiculous. The market doesn't reflect the economy. No, it doesn't. We all agree that, but you know, the comments you read about what is happening in the markets, you have to, if you're a trader, it's awfully interesting, unless you're invested in the markets through, you know, pensions and what have you. But as a trader, all you're looking, you know, you look at a chart, and if it's going to go up, you think it's going to go up, then you're going to buy it. If it's going to go down, you're going to sell it. If you're an investor, a long-term investor, things are a little bit tricky at the moment. We've got a bit of a bunching here of some of the currencies, particularly the pound at the moment. It's a little bit desultory. Normally it moves quite strongly at the London Open, but there's no news, is there, David? So that's all sort of stuck in there. Aussie yen looks quite interesting. Went, as I said, went down quite strongly, as did the and the euro. Aussie went up because, as I said, the Aussie was being sold. The Aussie is bought when sentiment is positive and sold when sentiment is negative. So it's one of these currencies, as I said, one of our factors in a reversal. For a currency, it's tied to sentiment, that is the one that you should look for, and that is the Aussie. Now, what we see here on the my Euro Aussie, I've got the Euro going up, I've got the Aussie going up, which tells me, yeah, I think possibly there's not a divergence between these two currencies as well. So that tells me on the hour. On the 15-minute, what's happening on the 15-minute? Again, I've just got my Aussie up because the Aussie, because of what happened in overnight, and as I said, we've had a nice move in the currency and currency pairs, and it's nice, just interesting to see what is happening at the moment. But if we take that off and we use this as looking at an extreme, well, what have we got? We've got a lot of unusual pairs, as I said, primarily because, you know, there isn't a lot of news at the moment. We've got the New Zealand Swiss at the moment, not a pair that we normally consider. We've got the Swiss yen. Again, both these currencies on an individual basis, they are both a safe haven currency and a currency of risk, as it were. So that's quite interesting. So if you were just looking for a potential reversal, this is what you would be considering looking at this particular indicator. On terms of, this is on the 15-minute chart. On the CSI itself, what's been happening? Well, we've got the euro going up, we've got the yen coming down. So that could be a potential in terms of not a reversal at the moment, because they are diverging. So we would have to be a little bit patient here. I know the CAD has had a big fall, being bought again. Bit indistinct, can't really tell there. But what you can do with this indicator, you can actually turn things off. So if let's keep the euro up for a second, let's keep the yen up, let's take that one, that one. Right, there we are, a little bit clearer here. Well, we can see the yen falling. That possibly tells us that maybe sentiment is changing. We've got a nice move up, a nice move going on at the moment in the euro yen. Hasn't got to an extreme at present, but because we're looking at reversals, maybe that's one that we could consider. What's also interesting on the slower time frames is we've got a bit of divergence on the euro and the yen, which is actually good, because what we want to see is this happening. Let's have a look. If we see something, let's just take that off there. Right, so we see here this move here that we see in the faster time frames. It looks like it's going to be looks like it's being replicated in a slower time frame, which is great. Maybe there's the start of a trend going on there. But what also happens is, if we're looking for a reversal in a faster time frame, what may that the implication of what you see on a slower time frame is that any reversal here may not necessarily, it may just be short-lived, because the slower time frame, the higher time frame, will always carry more weight, as it were. So that's just something else to be aware of when you are looking for a reversal, what I call a technical reversal on a faster time frame. You see these going up to these extremes, you think, oh right, that looks as though it's setting up nicely. But when you compare it with what's happening on a slower time frame, that could just be a pullback or a correction. It doesn't mean that is not tradable, because you as a trader, you could just be looking for a few points and a few ticks. I was listening to a trader who trades very, very big size on the futures, and and trades obviously the faster time frames. They're just looking for one or two ticks. They're not looking for big points. So as I said, and that's what they will do. They will look for reversals even within consolidation phases. It really comes down to you as what you want to do with the information that you are presented with on the charts as a trader. And there is no right or wrong way to play this market. It's down to you. And I know we keep saying that, and people, a lot of traders say, well, can you not just tell me, where do I get in, where do I get in, and where do I get out? I can't. All I can tell you, I can show you what to look for, what is happening, what is likely to happen, and then you take that information, you take that data, and you have to make the decision. So I can't give you any more certainty than that. But that's what I'm going to say on, I'm going to take a look at the Euro Yen in more detail. I also want to have a look at my Ninja Trader on the Euro Aussie, because I really want to put together looking at reversals through the prism of, as I said, we need to look at candles, candle patterns, but also support and resistance. And just very quickly flash up here, which I'll talk through it later, which is on the Euro Aussie, and there's a really classic example. This is the release of the Chinese news. Aussie was sold off quite heavily. There was a nice a really strong reaction in the Euro Aussie. We can see a ton of volume going in there, but then bang, it hit one of a significant level, which is this reversal, which is the R4 on our Camarilla. It was also picked up on the CSI. That's the kind of combination, if you like, of validating technical signals that we try and put together to see whether the reversal that we are seeing is actually valid or not. But I'm just going to pass over to David, and then I'm just going to scope out the Euro Yen, see what is happening over there.